On May 7, Warren Buffett appeared at the Berkshire Hathaway shareholders meeting and made a striking statement. He remains optimistic about Japan's 5 major trading houses, and intends to hold their stocks for at least the next 50 years. The markets reacted instantly. Shares in Mitsui & Company, Mitsubishi Corporation, Marubeni, Itochu, and Sumitomo Corporation surged. But Buffett is now 95 years old. A 50-year holding horizon is, of course, symbolic. No individual, or institution, can see that far into the future. What Buffett's remarks do suggest, however, is that he's deeply satisfied with his investment in Japan. And to understand why, we need to examine the nature of these 5 trading giants. The 5 trading houses Buffett has backed are not typical companies. They are pillars of Japan's industrial past. 3 of them, Mitsui, Mitsubishi, and Sumitomo, trace their roots to Japan's Meiji era, when they were powerful subsidiaries of the nation's dominant zaibatsu, or financial conglomerates. In the old zaibatsu model, banks provided capital, trading houses sourced materials and managed distribution, and manufacturers focused on production. These conglomerates formed vertically integrated empires that effectively controlled Japan's pre-war economy. Following Japan's defeat in World War II, the American occupation authorities made dismantling the zaibatsu a priority. Stocks in 83 zaibatsu companies were forcibly sold, and the formal hierarchy between parent and subsidiary was abolished, but the core trading houses survived. They remained central players in Japan's global trade and supply chains. During the Korean War, they made windfall profits, helping Japan earn $600 million in foreign exchange in 1951 alone. During the post-war economic miracle, they dominated exports and made massive international investments, turning Japan into the world's largest holder of overseas assets. Even after Japan's bubble economy collapsed in the 1990s, the 5 trading houses remained resilient, leveraging overseas operations to profit from the global supply chain. Today, their reach is vast. Mitsui and Mitsubishi specialize in energy and resources, iron ore, oil, gas, and steel. Itochu focuses on metals, machinery, and chemicals. Sumitomo is strong in real estate, logistics, and construction machinery. Marubeni operates in power generation and food industries. Their financials remain solid. In 2024, Mitsubishi reported 18 trillion yen in revenue and nearly 951 billion yen in net profit. Itochu earned 14.7 trillion yen in revenue with 880 billion yen in profit. And yet, for decades, their stock prices were chronically undervalued. Mitsui, for instance, hit 1,400 yen per share in 1990. Despite surviving the collapse of Japan's bubble and the 2008 financial crisis, its stock price remained stuck at that level for 30 years. Domestic investors grew frustrated with the trading houses' opaque governance, emphasis on government ties over market performance, and reluctance to pay dividends. By 2020, their combined market value had fallen below the value of their assets. It was in this moment of disillusionment that Warren Buffett stepped in. In August 2020, Buffett revealed that he had acquired 5% stakes in all 5 trading houses, and he planned to buy more. By now, his total holdings in the 5 firms have reached 1.9 trillion yen, worth approximately $13 billion. It was a masterstroke. First, he profited directly from the market reaction. Once Buffett disclosed his investment, confidence soared. Over the next 5 years, share prices nearly tripled. Second, the money wasn't even his. In 2019, Berkshire Hathaway issued yen-denominated bonds, using U.S. assets as collateral. Japan's interest rates are ultra-low. Buffett's borrowing cost was just 0.5%. Even the modest dividends from the trading houses covered his debt payments. Third, as the yen depreciated, Buffett gained further. The dollar appreciated by over 50% against the yen, substantially reducing the real cost of his borrowing. This structure allowed him to leverage Japan's deflation, low interest rates, and undervalued corporate assets, all while profiting in dollars. But can other investors follow Buffett's lead? Unlikely. Buffett has 3 strategic advantages most investors lack. 1. Information superiority. decades of networked access allow Buffett to distinguish between overvalued and undervalued firms with surgical precision. 2. Capital power. Japan's corporate world is famously insular. Its post-war keiretsu, successors to the zaibatsu, still control major corporations through cross-shareholding and interlocking board appointments. Outsiders, even with money, face walls of resistance. In 1999, Microsoft tried to buy Nintendo. A former VP recalls the Nintendo board laughing at them for an hour. Buffett, by contrast, negotiated his way in, carefully. He agreed to limit his ownership to 9.9%, giving him access to dividends without threatening board control. In February 2024, the 5 trading houses agreed to modestly lift this ceiling, allowing Buffett to expand his stake further. 3. Unmatched financial clout. In 2019, Berkshire Hathaway issued 430 billion yen in bonds, the largest foreign corporate issuance in Japan's history. In 2020 and 2021, it issued another 1.95 trillion yen and 1.6 trillion yen respectively. No other individual or firm could have raised capital at this scale or with such trust. And then, there's Buffett's narrative power. When he buys, the world listens. His investments become self-fulfilling prophecies. Others, hoping to replicate his success, merely fuel the momentum, and validate his strategy. Buffett's bet on Japan aligns with a broader question: is the country finally entering a new growth cycle? On paper, the signs look promising. For decades after its economic bubble burst, Japan languished in deflation. Wages stagnated. Investment dried up. In 2012, Prime Minister Shinzo Abe launched a bold recovery agenda, Abenomics. Through aggressive monetary easing and massive fiscal spending, Abe sought to push inflation to 2% and revive growth, but results were modest. From 2012 to 2020, inflation surpassed 2% only once. Most years, it hovered near 1%, or slipped back into deflation. Things changed in 2022. The Ukraine war shocked global energy markets. Japan, a resource-poor nation, imported inflation. Prices surged. Ironically, Abe, assassinated in July 2022, saw his economic goals realized only after his death. By 2023, inflation hit 3.2%. Japanese firms, long hesitant to raise prices, finally had an excuse. Wages began to rise. Retail, real estate, and exports surged. Unemployment fell to 2.5%. In March 2024, the Bank of Japan ended its 17-year policy of negative interest rates. A new chapter began. Even Shunto, Japan's annual spring labor negotiations, saw breakthroughs. Wage increases exceeded 5%, the highest since the 1990s. But every boom has its shadow. Consumer prices have soared. Food costs have jumped 25%. Electricity and gas, up nearly 10%. For workers whose wages haven't kept up, life has become harder. Small producers have shuttered. Marginalized populations struggle. Social tensions are rising. In May 2024, 2 violent incidents shocked the public, one in Osaka, one in Tokyo. Internationally, Japan's position is also under pressure. Despite a net foreign asset position of 533 trillion yen, the yen's devaluation has weakened Japan's financial power. In early 2024, Germany overtook Japan in both GDP and net overseas assets, and now, the IMF projects that India will surpass Japan in GDP within the year. Japan will fall to 5th place globally. Japan's monetary stimulus has not restructured its economy. Its information technology, AI, and renewable energy sectors remain underdeveloped. As Japan's population shrinks, its global ranking may continue to slip, soon behind the UK and France. Buffett's investment in Japan's trading houses was more than a financial bet. It was a vote of confidence in institutions that have weathered war, collapse, and reform, and found ways to survive. But Japan's economic future still depends on more than capital. It depends on vision. On innovation. On a new generation ready to do what the zaibatsu once did: reshape the world.